Good afternoon, everyone. On behalf of CANARI and the Caribbean Climate Justice Alliance, I'd like to welcome you all to this webinar on loss and damage finance, the second in our four-part webinar series on just and equitable equitable climate finance for the Caribbean. My name is Neve Vaughn, Technical Officer at CANARI, and I'll be helping to facilitate today. So please drop your name, organization, country in the chat to say hello. So some usual virtual housekeeping. Please stay muted and keep your camera off unless speaking. Use the chat box for questions or raise your hand. We will be recording the session and we will share the slides afterwards. A special hello to the allies that are online. The Alliance is a coalition of 60+ CSOs, activists, creatives, academics, and state and non-state actors working across the region on climate justice. It aims to leverage synergies, enhance knowledge sharing, and facilitate joint learning and action to build a strong regional movement by and for rights holders. This will help build a unified, coherent, and amplified civil society voice to enhance effectiveness, efficiency, and impact of calls for climate justice for the most vulnerable in the Caribbean. The Alliance launched the Caribbean Climate Justice and Resilience Agenda at last year's COP. It outlines priority needs and actions. One priority identified in the agenda is, of course, improving access to and delivery of climate finance for frontline communities, small and micro enterprises, and civil society organizations as part of a whole of society approach. This webinar series aims to contribute to this. So I'll share the link to the agenda in the chat in a little bit. So this series is on just and equitable climate finance for the Caribbean, and it continues conversation coming out of Antigua and Barbuda during CIDS4 and looks forward to Azerbaijan for COP29 in November, which has been dubbed the Climate Finance COP, as most of you know. Today's topic of loss and damage is made all the more important in the wake of Beryl, with an image there from Union Island on the screen. We hope these webinars allow us to share perspectives and priorities on improving climate finance as part of climate justice for the Caribbean. With global attention on finance for development, there's an opportunity now to shape the conversation and advocate for a more just, inclusive, rights-based approach to finance for the Caribbean. So I'll just run through today's agenda really quickly. So first, a big thank you for Ally Climate Analytics Caribbean for co-hosting today. Sasha Jatan Singh, loss and damage expert with Climate Analytics Caribbean, will be talking to us on loss and damage, climate justice, and finance. This will give us all some context for what loss and damage finance is, what it means to us as civil society actors in the Caribbean, and the crucial need to prioritize loss and damage finance that directly supports vulnerable Caribbean communities on the front lines of ever-increasing climate impacts, ensuring justice by channeling resources where they're most needed for recovery and resilience. Then we have Ms. Elizabeth Emmanuel. She is the she is with CCRIF SPC, formerly the Caribbean Catastrophe Risk Insurance Facility, and she'll be speaking to us on their invaluable work in disaster finance and climate risk adaptation and insurance in the Caribbean, and how microinsurance can be a vehicle for climate justice in the region. Both speakers will get about 20 minutes to present, followed by 5 minutes of Q&A. Following that, we'll have about half an hour for group discussion led by Sasha, where we want to hear from you on what are the key challenges and opportunities to access and delivery of climate finance for loss and damage. And what are the priorities for action looking to COP29? And lastly, we will then wrap up with next steps and closing. And with that, I will hand it over to Sasha.
Thanks so much, Neem. And hi, everyone. I'm Sasha Jatan Singh. I'm the loss and damage expert at Climate Analytics Caribbean, and I'm really excited to be here today and present to you on, this the big topics: loss and damage, climate justice, and finance. So let me just share my slides. So let me know if you could see them. Okay, great. So my presentation is two-pronged. It's really giving, the first part is to give a little overview and then key updates on the loss and damage fund. And kind of set the stage on what is expected at COP29, and then also to provide some key findings and recommendations from a report that that we published in June this year, a review of loss and damage in the Caribbean, 1994 to 2024, to really kind of link loss and damage finance, climate justice, and what are the needs and priorities for, being able to access and mobilize loss and damage finance, from the loss and damage fund and from other sources. So we'll see how quickly I could get through some very, I would say, heavy topics. And this is, I love to start with this diagram to really understand what loss and damage is, and to know that, we don't have any sort of formal or official definition for loss and damage, but it could be broadly understood as the adverse impacts of climate change that occurred despite or in absence of actions to reduce greenhouse gas emissions, mitigation, and to build resilience or to adapt to current and future climate change adaptation. So addressing loss and damage can be considered as the third pillar of climate action, since insufficient mitigation and inadequate adaptation has led to loss and damage. And then you could see loss and damage in this diagram consists of, slow onset events and extreme events, and it could be economic losses and damages and non-economic losses and damages as well. And I just wanted to give a history, a brief history of of loss and damage in the UNFCCC process. And loss and damage isn't a new concept, and I didn't put it in here, but it actually, the concept actually was introduced or proposed by Vanuatu in 1991 on behalf of the Alliance of Small Island States, when the United Nations Framework Convention on Climate Change was being negotiated, right? And they had proposed an insurance mechanism to address the losses and damages due to rising sea levels that would affect small island states. Of course, that wasn't, accepted or included in the Framework Convention on Climate Change. However, this concept of loss and damage and the push for including loss and damage finance, occurred throughout the history of the UNFCCC negotiations. And it was only, 31 years after, this first proposal by Vanuatu at COP27 in 2020, one day over the official end of the COP, that a loss and damage fund and funding arrangements were established or were agreed by parties. So that was a really historic decision and a real win for, for SIDS and LDCs and climate justice advocates. And last year at COP28, the loss and damage fund was operationalized, and there was an agreement to establish the board for the new loss and damage fund. And just a bit, some of the outcomes coming out of last year's COP is that, as I said, the loss and damage fund was operationalized there on the first day. So recommendations from this transitional committee that met to really decide on what would the recommendations be, how would the fund, would the procedures and so on be for the fund, was adopted on the very first day of the COP to really showcase what's a high priority, this operationalization of this fund was. Then also some key outcomes was that the World Bank was selected as the interim host and the interim trustee as well. And the fund board was also established, and we have 2 seats for SIDS. The first one is Fiji and the other one is Antigua and Barbuda. So we do have Caribbean representation for SIDS on the board. Then also the Loss and Damage Fund governing instrument was also established. And this is really important to know that this governing instrument actually supersedes any of the procedures and rules and so on by the World Bank that are not in accordance with the decision, the COP decision to establish and operationalize the fund. And that's quite important because that's what, developing countries have been pushing for, to ensure that this fund is independent and it actually is responsive and flexible and meet the needs of the most vulnerable countries and communities, and we're not held by the existing rules and procedures by the World Bank. And we all know the history of World Bank interventions in developing countries. So I think this was a real win. Then also we have approximately 660 million US were pledged to this new fund at COP28 last year. And then also, as I said, the board was established at COP, and in I would say the end of April, early May, we had the first board meeting. And the key outcomes of that was that, this was more procedural. So the co-chairs were elected, subcommittees were formed. Now, I guess more action happened and more key outcomes happened at the second board meeting in July. And this is where the fund got a name, and the fund is officially called the Fund to Respond to Loss and Damage, or FLD for short. The fund also got a home, and it's in the Philippines, and the executive director of the fund has a terms of reference. So this would be used to, select and nominate who the executive director would be. And the third board meeting actually took place last week. And the fund, this is where they selected a new executive director. And that person is Ibrahima Sheikh Diong, who is from Senegal, and also hosting agreements and trustee arrangements with the World Bank was also endorsed by the fund. And there's a fourth board meeting coming up. It will happen after COP29, and that will take place in December 2024. And I think this is quite important to note because the COP decision for you to operationalize the fund actually included conditions and exit strategies for the World Bank to ensure that if the World Bank didn't meet the conditions set out, or if the World Bank wasn't performing as it should, then that arrangement would be terminated and the fund would proceed as an independent standalone institution. So at COP29, we actually have one of the triggers, and that is that the board of the fund has to confirm to the COP and the CMA that the conditions set out in that in that decision can be met, and also that the fund will be serviced by a World Bank hosted secretariat that is new, dedicated, and independent. So that means that the interim secretariat, which was supported by the World Bank, would end. So this is actually quite important to see that if these conditions aren't met, then the World Bank will no longer be, the host and the trustee, and then we could proceed to have an independent standalone fund. So it's a lot of things happening at COP, and this is one of the big highlights to see if what is going to happen with the arrangement and the setup and so on for the fund. So far, it seems that yes, the World Bank is actually meeting the various conditions set out. Of course, we'll see what happens. And I think, we discussed like the mechanics and so on, but it's important to understand the value proposition of the fund to respond to loss and damage, and especially why it's so important for SIDS and LDCs. And what small island developing states and developing countries want is that we want a responsive and flexible fund. So we need timely support. We don't, when we have any sort of, extreme climatic event happening, we don't want to wait, a month or a year or two, which is what happens currently if we're trying to access the Green Climate Fund. It takes up to like 2 years to get the proposal approved. And that is, unacceptable when we're dealing with loss and damage. We also want simplified access to be able to access the loss and damage fund. So that would be, simplified application procedures and so forth. We also want that this, fund is country owned and led. So we have to recognize that, loss and damage and accessing loss and damage finance should be context defined and context sensitive. So it's not a one size fits all sort of approach. Then also, direct access is important. So national governments should be able to access it. And also, SIDS and developing countries also propose that we need to have a small grants window where we'll enable direct access to communities and NGOs that are dealing with and addressing loss and damage in, their local communities and so forth. And then also the focus is on, a push for programmatic approaches. So we're looking at long-term, consistent and sustainable financial support for dealing with and addressing loss and damage, and not only looking at, these pilot projects or short-term projects. So we want to ensure that it's long-term and sustainable over time. And I think that kind of sets the stage for, we have this fund, we have the particular, the value proposition, the sort of principles of what this fund should encompass to ensure that it's just and equitable and ensures climate justice. But at the same time, what we're realizing is that Caribbean, SIDS need to be able to be in a position to access climate finance. So we need to be able to report and assess the loss and damage happening in the region. And that's why we actually decided to do this study, this review of loss and damage in the Caribbean over the last 30 years. And this is the link, and I'll share it in the chat as well. And it's actually, what was interesting is, despite a lot of widespread loss and damage happening over the last couple of decades in the region, there wasn't any, comprehensive and systematic review and assessment of loss and damage, including loss and damage financing needs in the region. And this is the methodology, and it's focused on a literature review, which includes scientific and gray literature, and also national reports to the UNFCCC, and also publicly available assessments for specific climate disasters. So that could be, post-disaster needs assessment, PDNEs, or the DALAs, the damage and loss assessments. So some of the key findings is that, and I said this before, there's no internationally agreed definition of loss and damage. So that makes it difficult when we're trying to compare and assess and determine what we consider loss and damage, because it might differ community to community or country to country. And what we also found is that loss and damage is consistently framed as a climate justice issue by Caribbean SIDS, requiring international support as opposed to national responsibility. So even though we don't have any sort of consistent assessment methodology or anything, we have been consistently framing loss and damage as a climate justice issue that demands international support and international finance as well. And what we've seen is that we have various methodologies that assess the costs associated with climate-related disasters, but the two most popular ones in the region are the damage and loss assessment that's was developed and spearheaded by the UN ECLAC, the UN Economic Commission for Latin America and the Caribbean, and the Post-Disaster Needs Assessment, the PDNA, which was, developed and so on by the World Bank, I think. However, none of the methodologies that are currently used to assess loss and damage use the specific UNFCCC framing of loss and damage, and that's the framing, that's the diagram I put up earlier, that includes economic and non-economic loss and damage, that includes slow onset and extreme weather events. And some of the key findings, again, is that, 9 out of the 14 CARICOM countries mention loss and damage in their latest NDCs. And these are Antigua and Barbuda, the Bahamas, Barbados, Dominica, Grenada, Haiti, St. Kitts and Nevis, St. Lucia, and St. Vincent and the Grenadines. So this is interesting because of all the different SIDS regions, so Pacific and the and Africa, Indian Ocean SIDS, the Caribbean has the highest number of countries that have been including or mentioning loss and damage in their nationally determined contributions to the Paris Agreement. And that's quite important because it really highlights the urgency and importance of loss and damage to our countries. Also, what we've also seen is that the 2 main climate hazards reported on in the Caribbean were hurricanes or floods, and that was mainly economic and sometimes non-economic loss and damage that were reported. And existing loss and damage studies tend to focus on specific climate events, but they don't provide a holistic account of what the total loss and damage experienced by the region from multiple climate hazards. So it's basically just one climate event. But what happens when you have, and we've seen that already with Irma and Maria, what happens when you have cumulative loss and damage happening one after the other. And also, there hasn't been any sort of major studies that focus on non-economic loss and damage. And those studies that exist largely use a sectoral framing to highlight these impacts. So it could be, non-economic loss and damage to agriculture and fisheries sector, for example, but not holistically looking at how do we assess and how do we report non-economic loss and damage. And these are some of the key recommendations that actually came out from the report. And one of the key ones is that we need to develop and use a common regional approach for assessing and reporting loss and damage for the region. And using this sort of standard framing and scoping for loss and damage assessments and reports would make combining and comparing data across the region far easier. And also, this is where Caribbean SIDS need to, take front and say, this is what we consider loss and damage. So we actually develop a definition, and we develop, this is the assessment methodology we are going to use to assess what is the loss and damage costs and what are the loss and damage finance needs for the region. And this could include how do we incorporate, communities and sectors in contributing to being part of these assessments, because it could be, community-based loss and damage reporting that could feed into national reporting. So it's actually an opportunity here for us to really look at how we want to do this and lead the way in this, because right now there isn't any sort of methodology or framework for how loss and damage is assessed and reported under the convention. And this is really important, because this is where we could actually position ourselves to really for us to be ready to access and secure loss and damage finance under the new fund. And then another key recommendation is that we should look at developing national plans or programs to address loss and damage. So having this national approach to addressing loss and damage that could also lay that foundation for accessing finance under the UNFCCC, including the Fund to Respond to Loss and Damage, since, as I mentioned, one of the key principles is focusing on a programmatic approach. And another recommendation is that we have to start estimating the funds you need to address loss and damage. So what tends to happen now is that how we assess loss and damage is basically the cost, like the economic or non-economic cost of the losses and damages. But for loss and damage finance, and particularly for the fund to respond to loss and damage, they're not looking at these costs of the loss and damage incurred. They're actually looking at the costs of, the national actions or the planned activities for how you're going to respond or address loss and damage. So there's a disconnect in what are the values we've been providing. So this is where, when we're looking at or doing the loss and damage assessments, it would be useful for us to start including what is the costing or the estimate of what these, planned activities for addressing loss and damage would look like. So these would be our loss and damage financing needs. And we have that, so we'll be in a better position to be able to access loss and damage finance. And then also two other recommendations is that we should start reporting, loss and damage finance needs wherever we can. And the biennial transparency report is actually due. The first one is actually due at the end of this year. So this is actually a good opportunity to be able to start reporting loss and damage experiences and financial needs in the BTRs. Under the UNFCCC, and that would help to contribute to the evidence base on financial needs. So basically, we need to be able to start reporting on what our finance needs are related to loss and damage, and these are some of the mechanisms within the UNFCCC process, and we could do that. And lastly, and this is, on a national scale, it'll be useful to start tagging and tracking loss and damage in national plans and budgets. And that would help to increase transparency on the actual loss and damage spending and financial needs that's happening nationally. And it would also help to, enhance how we engage and enable greater participation from different stakeholders involved in budgeting and improve accountability in fiscal planning. And I think this is quite, it'll be quite useful, because if you're able to include loss and damage in how we do national planning and in our fiscal budgets, then now it's now incorporated in how we in our financial flows and investments and our financial priorities in terms of our spend. So I think this would be quite useful as well. And I think, I think that's it. I know it was kind of, it's quick, but if you have any questions, feel free to let me know. And we also have that open plenary discussion. So we could be free to, go into more detail and so on there, but feel free to share questions in the chat, or if you want, you could go ahead and raise your hand and you could ask your question online in person. Yep. And I see we have hands already. So Neem, would you be able to help me?
Yeah, sure. So we've got, I think there were a few questions dropped quickly in the chat first. So Jesse Williams asks, of the pledges, the L&D fund voluntary or mandatory? And in your opinion, what is the impact of this on climate justice? Also, why is 1994 the start of looking at L&D? He mentions that he thinks on the timeline that was the beginning.
So thanks for that. So in terms of the pledges, these are voluntary pledges, and no, it's not enough. I think recent studies have shown that, the scale of loss and damage finance that we need is between, 5 trillion to 11 trillion annually. And these are new reports coming out. So you could see that this is wholly not, it won't even, it is not even like a drop in the bucket, right? And in terms of the timeline, we wanted it ended up being a nice 30-year period, and 1994 is when the UNFCCC, it was ratified. So it just ended up being like a nice reporting period. Yep.
Great. And then Kristen has her hand up, but also had a question in the chat. So Kristen, if you want to unmute. And you
Sure.
can open your camera if you want.
Okay, can you hear me?
Yes.
Yeah, hi everybody. Sasha, nice to see you. Hi, thank you for the great presentation. That was excellent. The question I'm going to ask is the same one I put in the chat, which is on the point about budget tagging. Do you think that countries will be able to get funding for L&D spending that is in the past, essentially? Like, if they spend money on something now because it's something that is related to loss and damage, and it's, tagged in their budget and tagged as an expenditure. And then, once the fund is up and running, can they apply for reimbursement essentially later? Or is it only going to be things that are future funding? Or do we not know yet?
So I think these are some of the things they're trying to sort out in terms of the what is the eligibility criteria, what would be, what would be eligible to receive funding or not, like what are the activities. But so far, it has been looking at what are the planned or estimated actions or activities to address loss and damage. So not things that happened in the past. So that's why when I noted that, a lot of the loss and damage costs have been on loss and damage that was incurred by climate events, and not looking at what were the the planned activities and so on. If it's rehabilitation, recovery, and so on, what are those costs for it? So I hope that makes sense.
Sure. We still have a few minutes. Oh, we've got one in the chat. So we have, since the fund is focused on financing actions to respond to loss and damage, how will this be distinguished from adaptation actions since there may be overlap?
Yeah, so in terms of how to distinguish between adaptation and loss and damage, that's where the definition for loss and damage would be quite useful. But then noting that that when we're dealing with loss and damage finance, it's to look at activities and so on to address loss and damage where the limits to adaptation have already been met. So that's one way of trying to define what is adaptation and what is loss and damage as well. But as I said, these are some of the very technical issues that are being discussed as well.
Great. I think we'll take one last question before handing over to Liz with CRIF SBC. So we have, I know you mentioned that GCF takes approximately 2 years to access. How do you think this L&D will be different in terms of improving the time frame of accessing the funds?
Mm-hmm. So I think a lot of developing countries have been, one of the things they said is that they don't want another GCF. Like this fund cannot be another GCF because it takes too long to access the funds, and they have to go through too many hoops to prove that this is actually a climate related impact for the fund for climate finance for any of the projects that they want. So instead, what they want is simplified access. So that means you want easier applications forms, and they want an easier process. So you don't need to go through these accredited entities, specific accredited entities. They want to look at opening up to national entities, regional entities, and so on. And also they want to be able to show that that one certain criteria have been met. If there's any sort of climate disaster and so on happening, then funds will be available. And it's a bit similar to what Liz will be discussing when she's talking about parametric insurance as well. So they want to ensure that this fund is flexible and accessible, and they're looking at what are some of the measures they could incorporate to ensure that this happens. So monies that are needed for loss and damage finance gets to the vulnerable countries and communities as quickly as possible, rather than going through that process that's, you experience when you're applying to the GCF or the adaptation fund or the JEF as well. Yep. So thank you. And yeah, we have the open plenary again. So, keep your questions. And also please feel free to include it in the chat, because we will be taking those questions there. So thanks so much.
Great. Thank you, Sasha. Liz, if you're ready, you can start sharing your screen.
Thank you. Good afternoon, everyone. Good afternoon to the many colleagues that I see. I also see many of CRIF's current interns. So good afternoon to you, and I'll just proceed to share my screen. So good afternoon, everyone, again. So I'm going to look at parametric insurance as a strategy for loss and damage. It is being cited by the UNFCCC as a strategy for loss and damage. So my presentation this afternoon would be divided into 4 parts. In sessions like these, there are always going to be persons who are not fully aware of what you do as an organization. So I'm going to present a little bit about CRIF, a little bit about parametric insurance, a little bit about CRIF as a strategy or for loss and damage, and a little bit about how what we do can be used to support the most vulnerable communities, and how parametric insurance is also emerging as a very good tool for social protection and making social protection policies more shock responsive. All right, so let me start. So what is CRIF? All right, and to fully appreciate and understand what CRIF is about, it's important to get into the sort of origins of CRIF. Where is CRIF coming from? And the emergence of this facility came out of Hurricane Ivan. And for those of you who have either worked in the space or have studied in the space, I think Hurricane Ivan would be something that you would have interacted with in terms of the damage and loss across the Caribbean, or the billions of dollars of losses across the Caribbean region as a result of this event in 2004, costing, for example, countries like Grenada 200% of their GDP, also costing, for example, countries like Jamaica and Cayman. Recently in July, we saw Beryl, and Beryl took a very similar path as Hurricane Ivan did in 2004. 20 years later, in fact, one could actually ask, it was Beryl Ivan at 20, for example. But following Hurricane Ivan and the sort of damage that it caused across the Caribbean, the multilaterals were again offering loans to the countries that were significantly impacted, and offering what is referred to as fast dispersing loans or debt relief. And many times when we hear the words debt relief, as a layman, we think it's a grant, but it's actually a loan that adds to existing debt stock. But in reality, it's a loan that you would not have normally gotten, but because of the disaster at hand, you are able to access this loan for recovery efforts. So following Ivan, CARICOM heads of government basically said, listen, we can't take on more. They saw the experiences, for example, following Hurricane Mitch of Nicaragua and Honduras, where several years before, in, I believe, 1998, where those countries saw a significant increase in their debt stock as a result of the passage of Hurricane Mitch, which was a Category 5 hurricane. And Caribbean heads of government said, no, we need to find a way to be able to access liquidity following a natural disaster that does not look at loans. We're okay focusing on loans for long-term reconstruction and redevelopment. But for immediate recovery, we need quick liquidity. All right. And they approached the World Bank to try to find out if there was some kind of mechanism that could be put in place to allow them to access this quick liquidity. Studies undertaken reveal that parametric insurance would be the most appropriate vehicle to allow for access to quick liquidity. And parametric insurance through a risk pool will be the best mechanism, meaning that you're not going to have each single country trying to access or to get coverage under parametric insurance, but it would make more sense as small island states to come together, to pool together, to approach the reinsurance market as one package to benefit from lower reinsurance costs coming together, but also recognizing that because of the levels of debt and the debt to GDP ratios in some of small island developing states, they cannot even access the reinsurance markets to be able to access insurance for this high level risk that we're looking at. So this led to the birth of CRIF, a bespoke insurance solution in 2007. CRIF was originally designed to limit the financial impact of hurricanes and earthquakes, or tropical cyclones and earthquakes. And it is set up to provide short-term funding immediately following a natural disaster or within 14 days of an event. And that is our key value proposition, to be able to provide liquidity to countries if their policy is triggered within 14 days. And for some events, we're able to tell within minutes what a payout could be. So for example, in the case of an earthquake, in the 2010 earthquake, we knew what that payout could be within minutes after, minutes of that earthquake. But of course, we have to do background, you have your auditors having to rerun the model to ensure accuracy, etc. But we are seeing more and more where we have been providing portions of those payouts within a few days of the event, ensuring that the full amount is paid to the country within 14 days. But one of the things I want you to recognize is that CRIF was not designed to cover all losses on the ground, but to provide an injection of liquidity following a natural disaster at the point when governments need it the most. CRIF essentially is the Caribbean and Central America's parametric insurance facility and development insurance company. Today, our impact and footprint looks very different from when we started in 2007. When we started in 2007, we had 16 Caribbean governments. Today, our membership is up to 30. So we have 19 Caribbean governments, 4 governments from Central America, 3 electric utility companies, because we are able to cover transmission and distribution systems, overhead transmission and distribution systems, 3 electric utility companies, and 1 government-owned tourism attraction, largest dolphin-based tourism attraction in the Caribbean, and that is in Cayman Islands. We started out with 2 products. We now offer 6 products. So tropical cyclone and earthquake, excess rainfall, and we do offer products now for sectors, electric utilities, water utilities, and for the fisheries sector compared to 2 when we started. One of the things that we've been able to do in terms of the product offering is to utilize our base products, our tropical cyclone and our excess rainfall products, and to create products specific to sectors by manipulating the parametric models that underpin our products. So for example, we can develop a product for agriculture because the models that underpin our products, for example, we have what is referred to as the hazard module. The hazard module really looks at the hazard itself. So we're looking at hurricanes from the 16th century, for example, in that module. But we have a module called the exposure module, which gets very specific to the country in terms of what you have in country. So we then are able, if we're looking at the electric utilities were able to downscale that model to incorporate the assets or the exposure on the ground of the electric utility companies and what we're covering. We became what is referred to as a segregated portfolio company in 2014 as an SPC, which allowed us to provide coverage to other geographic regions outside the Caribbean and to offer new products to cover additional perils. One of the things that the SPC allows us to do is to keep risk of different groups, different geographic regions separate. And then when we are going to the reinsurance market, because insurance needs reinsurance, we're able to pull everything together in one common pool to allow for the benefit of lower premiums for our members. One of the things, and I'll speak to this a little bit when I speak about what a risk pool is and what are the benefits of a risk pool, is that we continue to be able to get reinsurance cover. In many cases, in many spaces around the world, reinsurance is pulling back. So the capacity to sell insurance is actually decreasing in spaces like the Caribbean, in which climate change and the effects of climate change are becoming more and more significant. The risks are too high. Operating as a development insurance company, and I'll explain that a little bit, allows CCRIF, or the appetite to provide reinsurance for CCRIF actually increases. In fact, this year, our reinsurance costs actually went down compared to many other insurance companies in the Caribbean and Central America, where reinsurance costs went up because of climate change. We also, since 2007, we have made 75 payouts to 20 of our members, totaling about $358 million US. As I said before, our payouts are not designed to cover all losses on the ground, but to provide a quick injection of liquidity for response and recovery activities. So it's not designed specifically for reconstruction or redevelopment, although some countries have used payouts in that way. Further, we continue to provide increasing coverage to our members. In the last 4 years, compared to when we just started, our coverage, we are providing in excess of US $1 billion in coverage, 1.2, 1.3, 1.4, definitely in excess of 1 billion in coverage compared to when we first began. We continue to improve the models that underpin our products so that our model losses can more accurately reflect the actual losses on the ground. And that is by improving, for example, the databases that underpin our model, the data that underpin our models. In 2007, we actually started with an off-the-shelf model. Today, our models are built by CCRIF. They're owned by CCRIF and they're owned by our members, and they continue to be strengthened. All right. Another thing about us is that as a development insurance company, we have also developed a technical assistance program, which is akin to a foundation, but our program is designed to build resilience in communities and build capacity of stakeholders to advance the sustainable development agenda in our region. So the fact that we could have 27 interns this year or 199 interns over a period of time speaks to the fact that what we're able to do with our profit as an insurance company, we have to make profit. But as a development insurance company, once we pay our bills, that profit goes back into our members, into programs like these. To maintain financial sustainability, we must make profit in the insurance industry. That is called surpluses. But let me share a little bit with you about parametric insurance. Now, when parametric insurance was selected as the basis for CCRIF policies, it was driven by two things. One, it was less expensive than the equivalent indemnity insurance policy because it doesn't require the loss assessment that is done in regular indemnity policies. It doesn't need that for payouts to take place. allowing claims to be settled quickly. So this is a key feature of parametric insurance, because once you have payouts, governments can then utilize those payouts to help the most vulnerable in their population, to fix pieces of infrastructure. So what is parametric insurance? And in very simple and layman's terms, it covers the probability of a predefined event occurring. For example, it covers the probability that you may be expected to have a hurricane this year. So we're not looking at indemnifying actual losses incurred after the event, but it pays out based on something that is predefined. So we are insuring the policyholder. In our case, we're providing sovereign level insurance. So we're providing insurance to government. So it covers that policyholder against the occurrence of a specific event by paying a set amount based on the magnitude of the event. So you're selecting as a country the event that you would like CRIF to pay for in advance for the event occurring. So as a country, you're sitting down and you're assessing and you're saying, okay, I think we could manage a Cat 2. I think we could manage our seasonal floods, but let us transfer what we cannot manage to CRIF, right? So we make the payouts based on the triggering of an event, and that is based on the parameters that a country chooses, right? Or defines where it wants or when it wants to receive a payout. But what that also means is that our payouts are detached from a specific asset, because we are insuring against the possibility of this event actually taking place, and what you are willing to retain and what you are willing to transfer to CRIF. So we make the payout based on the intensity of the event, whether it's hurricane wind speed, earthquake intensity, volume of rain, and the amount that is calculated at the point of purchasing in your policy in a pre-agreed catastrophe model. All right? So it's a cost-effective way to pre-finance short-term liquidity. Now, depending on what countries purchase, because of fiscal constraints, our countries are in some cases purchasing, they're not purchasing enough coverage. We can make payouts of up to $150 million per event, per peril, per country. So for example, what that means, you can actually purchase a policy for coverage for tropical cyclones of up to 150 million. And you can also purchase an earthquake policy of up to 150 million, an excess rainfall policy of up to 150 million. Many of our countries are not purchasing, and it's 150 million US dollars. They're not purchasing that level of coverage. All right, they're purchasing way less than that level of coverage. All right. So as I said before, we really do represent a cost-effective way of pre-financing short-term liquidity to begin recovery efforts after a catastrophe event. So where do we position? We are referred to as an instrument that helps to close the liquidity gap. So if you look at this instrument, following a catastrophe event, government tends to have short-term emergency goods and services. So you have that. There are very few governments that actually have bank accounts, or what we refer to as dedicated reserve funds, waiting to be spent following a natural disaster. And if they do have those funds, it is small. So CRIF occupies that space between emergency response and long-term reconstruction and redevelopment. So what we do is fill the liquidity gap to fund government services, to fund activities that will support the most vulnerable in the population. As I said before, we are a risk pool, and I'm going to speak a little bit about that, because I mentioned the fact that many countries are actually, they are not purchasing enough cover based on their own needs. But to say to you that as a risk pool, we provide many unique benefits to our members. We provide more affordable access to parametric insurance products, helping countries to increase their coverage levels, right? Because once we pool those diverse exposures and we retain some of the risk and we transfer excess risk to the capital markets, it helps our countries to be able to access premiums at a lower rate. At CCRIF, we have been able to achieve financial and operational efficiencies, which we then pass on to our members in the form of lower premiums. And this is the whole idea behind us being a development insurance company. The more members we have in the risk pool, this equates to more benefits for members. Again, economies of scale, efficiencies. Risk pooling has allowed us to enter new geographical areas, new sectors, and to create more diverse products. And what we have been able to do through risk pooling as well, and the increasing membership in other spaces, is to also create policy dialogues between, for example, the Caribbean and Central America. Among disaster risk financing instruments, because this is sort of like, as we speak about the disasters we're exposed to, what has emerged is that there are several instruments that can be utilized by government, and government must adopt what we refer to as a risk layering approach to how they manage these emerging hazards, the frequency, and so on. And when we think of parametric insurance, we are at what you would say the top risk layer, right? The probability of some of these events, and that's changing, and we're recognizing that, is low, but the severity or the impact is high. So for example, at a very low level where you have the probability of an event occurring being high, like your seasonal floods, the severity of the impact not as great as, say, a Category 5 hurricane, it is suggested that you have in place contingent budgets, national reserves, dedicated reserve funds, which are held at your central bank, etc. So amongst disaster risk financing instruments, CCRIF covers those events that have a low probability of occurring, but for which the impact is. All right, and this is just to show you the landscape of some of the instruments that are available, and it also shows you the notion of risk layering. So you will hear countries speak about, you know, risk layering, the instruments they have. One of the things that we ought to remember as well is that not every single country has access to all of these instruments, because in the Caribbean I'm speaking, because they may not be available to these countries. We also have a relatively new instrument. Well, it's new. The take-up is increasing, but something that is referred to as looking at your debt clauses, and if a significant event takes place, you can actually trigger the debt clause in your loan agreements and reduce the payment on your existing loans, or stop the payment on your existing loans for a particular period, and then you pick back up those payments after a particular period with no penalty, right? What is interesting in this is that the CCRIF model is actually used in many cases to underpin the debt clauses. So it's another use of the CCRIF model. So if the CCRIF model triggers at a certain level, this is what is being said, and therefore we can stop the repayment of your loan until you recover. So let's say it's stopped for 3 years. After 3 years, you pick it back up and you begin payments without a penalty of, say, increasing interest, etc. So as I said before, we have made 75 payouts to 20 members, 20 of our 30 members, totaling 385 million. The table on your left actually shows the payouts following Hurricane Beryl. In July, all payouts made within 14 days of the event. And we see here you know, for Grenada, Grenada is one country, one of CRIF members that has all the policies that we have on offer. So they have the tropical cyclone, excess rainfall, they have earthquake. The government also purchases cover for the fishery sector, coast. The electric utility company purchases for electric utilities, and the water utility company, which is government owned, also purchases for water. Following Beryl, all their policies triggered. Grenada is now the recipient of CRIF's largest single payout of 42.4 million. We have several countries in the Caribbean receiving a number of payouts, like Trinidad and Tobago, 9 in total, Barbados, 8 in total. Members receiving the highest value in payouts, Haiti, 78 million for several events. And so far, payouts in 2024 are at $90.9 million, all made within 14 days of the event. And I want to zero in a little bit on this table to show that Guatemala, and I just want you to remember this, because I'm going to pick it up in another slide, that Guatemala received a payout of $6.4 million US following a rainfall event on June that occurred between June 13th and 19th. So they got $6.4 million US. And their policy was exhausted. It got to the coverage limit of the policy. Our policy year starts on June 1. So their entire policy has been exhausted by June 20th, or when we paid out. So if it was June 19th, 14 days later, they would have received their payout. We are in a space of climate change. A lot of what is happening around us, we're attributing to climate change. So we're going to be talking about that a little more. What does that mean for them? Our policy year starts June 1 and ends midnight on May 31st. And they have exhausted their cover on 14 days after the 19th of June. We will discuss that very briefly for a moment. In terms of CRIF payouts, I want to touch on that because whilst we have X amount of payouts, there's always been this notion, or it continues to have this notion, that there is an assumption that payouts do not filter down. Now, we monitor and evaluate those payouts. And one of the reasons we're able to do that is because although members pay their premiums, because we operate as a development insurance company, we do tend to use some of our profit in provision of discounts. We've also been receiving over the years, grants from development partners to support premium. But the grants that are given are often not used to purchase current premium, but maybe used in many cases to increase their coverage. Because remember, we're saying that coverage is not where it ought to be for many countries, right? So in some years, we have governments helping to increase coverage. And what is interesting with that is that countries, in the years when the discounts reduce, or it may just be the small CRIF discount, countries do not go back to previous coverage levels. They either remain where they are or they increase. And that is significant for donor funding because it says your funding is actually not just paying for a discount today, but it's sustainable because countries are not going back to where they were before the discount, but in many cases, increasing coverage. They may not increase coverage in the next year, but they may actually go up to increase coverage in later years, but they're not going back. In terms of payouts, there is this notion sometimes that people say, well, where is the payout? You know, the governments get the payout, but many of our payouts go directly to persons. So 62% of our payouts have been used, and we don't have the payouts under Grenada and so on yet, the use of the payout, sorry, because that happens 6 months after they receive the payout. They're required to report on it. But up to the end of 2023, 62% of our payouts have been used for immediate post-event relief. And that could be in the form of medication for children and older people, food, shelter, tarpaulins.
Isla's just giving you a small time check. We have about 5 minutes max.
Okay. tarpaulins, etc. Some of it has gone into long-term infrastructure. So following Irma, for example, Hurricane Irma, TCI, many of their schools were destroyed, and they then used their payout of about $15 million to build back better, build more resilient schools. So this is the layout of the payout. I just want to add here that with our parametric insurance models, we are developing new products for additional sectors. So we have a number of products coming out. We have a multi-peril agricultural product, a flood product that is specific to large-scale flooding, and especially in countries like Guyana and Suriname and Central America, housing product, a tourism product for government infrastructure, especially some of the aging infrastructure that we can't get rid of immediately, but there is no coverage for, products for perils such as drought, sargassum, and microinsurance for vulnerable groups, MSMEs. So I'm going to touch a little bit in my last set of minutes as CCRIF as a strategy for loss and damage. And we know what climate change is doing. But one of the things is that if we can, loss and damage is often referred to as impacts of climate change that occur despite countries' adaptation and mitigation efforts. And we know that there are limitations to mitigation and adaptation. And what this point does is that it makes a case for a stronger case for parametric insurance to address loss and damage, which is taking on greater significance because of the intensity, unpredictability, and frequency. CCRIF payouts are within 14 days to help countries recover faster after an event. And where resources are used for infrastructure development, for example, it also helps countries to build back better. But what about utilizing and increasing the value of that, of what is in your loss and damage fund through insurance? So if you, for example, if your coverage was $1 million, if you paid premium of $1 million to CCRIF, your coverage is likely to be 10 to 12 times that $1 million. So your coverage would be 10 million. So by investing in insurance, you're actually expanding the amount of resources that you could have for addressing the needs following climate-related events, right? So what it does is that we feel that parametric insurance can help to better manage the growing risk and losses that we see. Parametric insurance is also being used to make social protection systems more shock responsive. And we are working with the World Food Program to do that. So we have seen during Beryl, because the World Food Program does what is referred to as a top-up. So a country purchases a tropical cyclone policy for CCRIF. Let's say their premium is $1 million. World Food Program comes in and gives them $100,000. And then with that $100,000, if the policy is triggered fully, we have, or the country now is required to put that $1 million in the coverage that they would have gotten in the payout to social protection systems. And then the World Food Program works with them in terms of cash transfers, etc. And we've actually seen it work. One of the things that parametric insurance does is that it addresses more than just physical damage and infrastructure. It actually protects economies, and it safeguards economies from economic exposure as a result of natural hazard. So it reduces the exogenous shocks that these economies face following natural disasters. We are better able to match capital to the risk caused by climate change. So what we're saying is that parametric insurance and the use of risk pooling is more economically viable than traditional insurance. The final thing I wanted to say, but I don't know if I have any time, is how we are addressing loss and damage and what we have in place. So first and foremost, we introduce what is referred to as policy endorsements. And it's like you have a health policy, but because you're a woman, you get breast cancer coverage, then we're doing something similar as well. But this one now operates like major medical for insurance. So if your policy is exhausted, as in the case of Guatemala, that example, we put you back in, we are able to reinstate your policy, your full coverage limit, under something called the reinstatement of sum insured cover, which is a minuscule amount of money that you pay to get back the full coverage to be able to be covered until the end of the policy year. And then we have put in policy endorsements for something called a localized damage index, where we're recognizing that in countries, you have micro events taking place that may not cause your policy to trigger. Okay, so I'm finished, so.
Great, thank you so much, Elizabeth. Sorry we couldn't get all the way through, but opening the floor to some questions, Q&A. If anyone has any further any questions or would like to get the slides, we will be sharing the slides afterwards. So no fear, we can share the information. I'll just share my screen quickly. Here we go. So Sasha, if you want to jump in.
Sure, no problem. But I see that we have a few questions for Liz. So so I'll just it's in the chat. So Oro said, thank you, Elizabeth, for the clearest presentation I have seen on parametric insurance and the CCRIF. Does the fact that the payments respond to the magnitude of the event, and I imagine it does not respond to slow onset climate impacts rather than the magnitude of the losses, mean that the projections of premiums relative to payments is sustainable, or is climate damage in the longer run uninsurable?
Well, thanks for the kind words at the top. The payment responds to, yes, the magnitude of the event based on what you think you cannot retain. So let's assume you're saying that for a particular event, I am going to see coverage for everything above a category 3, right? So you're looking at it from that perspective. So if a category 3, based on, if a category 3 event hits and you have purchase cover for that, you should get a payout. It's very hard to model some of the slow onset events, which is why we have not yet come out with a drought product, which we've actually just finished. So it's going to come out. So like drought, I believe, is slow onset. We don't cover the magnitude of the losses on the ground, but the models, interestingly, can indicate what the loss on the ground is, right? Because our models, we actually compare our models. And I think Sasha spoke about the dollars and the PDNEs. And yes, you were correct. The PDNE is the World Bank. When we compare the losses to the dollars and so on, our losses closely converge with the losses on the ground. Based on the projections, is payments relative to payments rather than the magnitude, mean that projections of premiums relative to payments is sustainable, or is climate damage in the longer run uninsurable? And, you know, I mean, that's a very interesting question. And I wouldn't want to say that climate damage is uninsurable. But at the end of the day, reinsurers are going to continuously assess the risk. For them, it's a money-making business. And they may decide not to provide capacity, because we're already seeing that, right? We're already seeing where home insurance is increasing significantly as a result of the reinsurance market not providing capacity for the provision of home insurance. And where you're getting it, it is significantly high. And I think I had a class just last night, and I was saying, when I saw my house insurance letter this year, I thought I wrote a paragraph in the letter, because it basically said, due to the increasing frequency and intensity of climate-related events, we're not able to offer a cheaper premium because the reinsurance market, the risks are too high, and therefore, you know, there is no negotiation space, right? So basically, that is what it was saying. So what you're going to see emerging is that things like, for persons who have mortgages on their house, things like mortgages are going to increase significantly as well, as risk climate change intensifies and we have more and more events. So, I mean, it's a very relevant question, but it's not a question like, I wouldn't want this to happen, but then at the same time, it is something that we have to consider not being provided with with the capacity to provide insurance as the impacts of climate change intensifies.
Mm-hmm. And I think that's quite true in that the last year, the entire Caribbean had this I guess this review of the reinsurance market. So premiums increased not only in property, but also, you know, motor, health, and so on. And there is that paragraph saying because of the risk, the climate risks, the premiums have increased. There, you can't negotiate, you can't do anything about that. And I think that kind of sets the tone into looking at these discussion questions, because we're really seeing how climate change and climate risk is affecting a lot of our you know, insurance and financial markets as well, and how that's impacting on people. Because what we're seeing, and we've been seeing it over the past few decades, is that homeowners now increasingly they're unable to afford house insurance. And you know, what's going to happen to those people affected by extreme weather events and so on? They can't afford to rebuild because they don't have that insurance, or you know, and it is going to be an issue that we need to start looking at, that that I guess the justice concerns with how this reinsurance market operates, how you know, the financial institutions operate as well, in terms of how they provide, or what sorts of financial I would say financial products they offer for building climate resilience and so on for people's homes, like properties, businesses, and so on, to address. And this is not just adaptation or mitigation, but now we're going into loss and damage, right? And I think it kind of sets the tone for this plenary discussion on what the challenges and opportunities are for loss and damage finance, and just getting that overview of what the CRIF is and how the CRIF has been working. And it, you know, it's been utilized quite, you know, in the board for the loss and damage fund, as, you know, as a best practice to show this is how you know, disaster risk financing can be able to be accessed quickly or disbursed quickly, and what sorts of mechanisms can be used to trigger payments. And one of the suggestions, and Elizabeth actually stated that, is that you could use the, you know, if it's a grant from or disbursement from the loss and damage fund to top up your existing parametric insurance policies, right? So that's one way to do that instead of designing a completely new mechanism. So that's one thing. But these are the key questions that I want us to guide this open discussion. You know, what are the key challenges in channeling loss and damage finance to the local level? What opportunities are there to improve access and delivery of loss and damage finance at the local level? And also, what are the priorities for action looking to COP29? So, you know, the floor is open. If you have any questions, feel free. And I saw Liz had your hand up.
Yeah, I was just saying that two things. One, parametric insurance can actually grow loss and damage funds. I mean, can actually grow, funds to address loss and damage. And I think, I don't know if I was clear in my presentation on that, but you top up a premium with $100,000, you get an extra $1 million, or $1 million or more in coverage, depending on how much is triggered. And I actually had a slide, which I didn't get to show, which shows how much money Grenada got and Jamaica got as a result of the top-up amounts from WFP. So it actually shows that it can grow the funds we have. The other thing with CRIF, and it's going back to Ero's question, is that because we operate as a development insurance company, the reinsurance market has an appetite for selling us insurance because we make them look good, right? Because we're saying that we're not taking profit and pocketing it. We're taking profit to build resilience. And by extension, they would rather sell to us than to sell to, I don't want to call an insurance company in the region, but you know the insurance companies that you interact with. So they will rather provide more capacity to CRIF because they see themselves as doing corporate social responsibility. And in fact, I believe that at the reinsurance roadshows, our technical assistance program is also something that our reinsurance service provider and CEO actually speaks to, because they see themselves as doing good by providing insurance in this way. So that's something that sort of safeguards our ability to continuously access capacity at a lower cost, right? So I want to say that.
Thanks. Thanks, Liz. And I see we have a question from Oro on how does the panel see the recent approval of the Multidimensional Vulnerability Index, the MVI, at the UN General Assembly playing out? And what is necessary for it to be adopted and used by IFIs and other relevant actors as another area of climate finance progress championed over decades by SIDS, with the final push by Antigua and Barbuda. So I guess that would be the Antigua and Barbuda, what is it?
The thing coming out of the
Yes. But I think having the multi-dimensional vulnerability index actually endorsed at the General Assembly of the UN is a real win, because now we could start utilizing that in how as one of the eligibility criteria for accessing climate finance for the loss and damage fund and for other climate finance funds as well, because generally that who can access the funds is really tied to your GDP per capita. And if you're high, depending on your what is it, ODA ranking, whether you can access certain funds or not. So looking at this multidimensional vulnerability of a country could really enable countries to be able to access funds, because if you're only looking at GDP, that's not a full picture of the different vulnerabilities that a country could face. Yes, Liz.
I also want to point out that ODA eligible countries are one thing, but then what I do not think we're fully capitalizing on, it's something that CRIF is investigating now. It's being listed as ODA eligible institutions. So like, let's say a CANARI, you need to investigate that. Climate analytics, CRIF, we need to investigate being placed on ODA eligible, as ODA eligible institutions. And there is specific criteria which would allow these institutions to access financing for issues that we're talking about. But a lot of people aren't capitalizing on it. There is a stronger focus on who is an ODA eligible country as opposed to what makes me an ODA eligible institution. So I just want to point that out.
And that's quite interesting to note. So I will be doing some research on that. I'm
Annex
sure.
2.
Yeah.
At Annex 2 of the ODA eligible things. I think it's Annex 2, and you should pick it up. Okay,
thank you. And I see there's another question here. So this was related to your presentation. And it was on, can private sector apply directly to the CRIF, or must it be through governments and I think this was more for the new suite of products.
All right, so I see another question too, which I'll just fold into this one. It depends on the product. So we were able to go into the private sector market with the electric utility product, because most of our electric utilities in the region, whilst government may have a small amount of shares, many of them are privately owned. So it depends on the product. I say that to say it would depend on the product. And so it would depend on what that product is and who and the stakeholder related to that product. In terms of things like hurricane, cyclone, and so on, that is government. But we're also investigating microinsurance products as well. Currently, we're working with the Guardian Insurance Group and the Munich Climate Insurance Initiative to bring to market a microinsurance product that would target vulnerable groups as well as MSMEs, etc. And we're hoping to be able to deliver on that, to start delivering in Jamaica and I believe St. Lucia in maybe the next month or so, to be able to launch those products and to have it active. So that is another way. CRIF is also in the process of putting in place a multi-peril agriculture insurance product, which may be sovereign related, but it may also have some amount of leeway to allow for private sector participation. We have a product, for example, called Coast, which is for the fishery sector. This is a sovereign level product for the fishery sector that has microinsurance features in that some of the payout can actually go to the fisher folk. Now, one of the things with Coast is that cooperatives have an interest in supporting the government to purchase premium because they recognize how vulnerable they are to many of these climate-related events. So we're also looking into those kinds of avenues which will bring about some sort of private sector interaction with the product. In fact, just to add to the discussion, and with Beryl, Grenada's product triggered, full trigger, its Coast product for the fishery sector at about 1.07 million US dollars. And that's not a small amount of money because it only covered about 56% of the damage in the fishery sector. But what is good with the payout is that it's ensuring that fisher folk are able to fix their boats, for example. So that payout went directly to registered fishers who had boats, who can fix their boats. And what we're able to ascertain as well is that over 600 fisher folk will be able to go back out to sea in the shortest possible time to be able to get back to their livelihoods. So sharing that.
Yeah, no, thank you.
Just one more thing, Sasha. The flood product and excess rainfall. Excess rainfall focuses primarily on the volume of rainfall. The flood product is originally being designed for countries like Suriname and Guyana, where fluvial flooding is an issue. And our products, as they are, the rainfall product, does not address the uniqueness of Guyana and Suriname. It would also help to address the issue of international waters. So like, for example, I always get this wrong, so geography people help me. Belize is bordered by, I believe, is it Guatemala or Honduras? But when there is significant rainfall, let's say it's Honduras, right? I think I have it wrong. In Honduras, Belize floods. There is no rain in Belize, but they are at the mouth of the river. So several communities in part of the country just floods out and it causes significant damage. So that product will also help to address international waters, which is really when rivers flow from one country to the next, or several countries share the same river. Okay, so that's the difference.
Okay.
Okay, so we're going a little over time. So please apologies to anyone that do have to drop off, but I think we can maybe answer one more question and then we can go to closing and next steps.
Sure, no problem. And I actually really like Jesse's question, so I am going to say it. So Jesse, this L&D fund seems like a multilateral thing. So how are people on the ground accessing this? And I think this is a really valid question because like what you're seeing here is this disconnect with what is happening in the negotiations and the design of the fund, but at the same time, you're seeing these adverse impacts of climate change due to, you know, hurricanes, floods, droughts, and so on happening. So how do we connect those two things together? And I think you've seen examples from what CRIF is trying to do to enable you know, impacted communities and people to access these much needed funds for recovery and so on quite quickly, if it is through the coast fisheries parametric insurance mechanism, where they're able to at least start back being able to fish again and continue with their livelihoods. Also in the, you know, the fund to respond to loss and damage, one of the key principles is direct access and having it flexible and flexible, equitable, and so on. And like a key component of direct access is having this small grants window where communities and civil society can access funds directly from the loss and damage fund to do work on the ground to address loss and damage. So you're seeing it at both levels. But I think when we're talking about what are the priorities for action looking to COP29, it's really looking at what can the Caribbean Climate Justice Alliance, what can they do to elevate these concerns, and the priorities for how do we ensure that we could channel loss and damage finance on the ground to the, you know, to the people and communities and areas that most needed. And I think that's where we definitely need the Caribbean Climate Justice Alliance to come together and raise their voice and show that this is a real issue and we want to be a part of the conversation and we have solutions already, you know, here, and just start having that conversation, start advocating for it as well. So that's my final thought, and I'll hand over to Neem. Thank you.
Great, thank you so much for that. Thank you for our great panel discussion. And yes, on that, so we have an opportunity over the next year to raise the awareness of the needs to include civil society in spaces that are discussing the future of climate finance. So we can highlight the needs of our communities and demand systematic transformation to better support locally led action and those on the front lines channeling or aiming to channel funds to the ground to build resilience and implement adaptations, and of course to respond to climate disasters that are increasingly causing major loss and damage, responding to these disasters in ways that are just, equitable, and maintain the dignity of those most vulnerable. And so to that end, and considering the Caribbean Climate Justice Alliance's resilience agenda and its call for improved access to and delivery of climate finance for frontline communities, small and micro enterprises, and civil society organizations as part of a whole of society approach, the Alliance and the Access to Finance Working Group have proposed a climate finance advocacy campaign that we hope to run from sort of late next month, kicking off on International Day for Climate Action. And so if any of you in the audience, any of our allies are interested in working on this, let us know, drop a message in the chat or email me. Neve, it's spelled kind of funny, I know. It's Neve, NIAMH, @canari.org. And so we're very excited to work together to make this a big, collaborative, and visible campaign to champion those on the ground and the most marginalized, and getting them the climate finance access that they need. So much like Sasha said, this is a space that we really think the Alliance can, you know, help in raising voices and participating in these very needed discussions, or finding our way into these discussions. So a huge thank you to Liz and CRIF for presenting on their important work. Thank you, Sasha, and our ally, Caribbean Climate Analytics Caribbean. Sorry, there's too many Caribbeans in climates. And thank you for co-hosting today, Sasha. Much appreciated. Also, thank you to Aaron with CANARI, who is helping behind on tech support. And special mention to Ayanka Grandison, who is on vacation, which is why she isn't with us today, but whose work at CANARI to co-convene the Alliance has been so invaluable. And of course, big up to all the allies online and all the future allies. I've dropped the link in the chat where you can learn more about the Alliance, the agenda, and how to become an ally. And I also have to thank our fantastic funders whom we couldn't do this work without. So the Open Societies Foundations. And with that, I don't want to leave you all too much later. We're gonna just say thank you and see you at the next one, which will be on debt, climate justice, and finance on October 10th. So thank you again for coming. And if you have any questions, you want to get involved in our climate finance advocacy or become an ally, please feel free to email me. So yeah, with that, I'm going to say goodbye to everybody, and I hope you enjoy the rest of your day.